Welcome to part 2 of the latest podcast from the Gold Chronicles with Jim Rickards and Alex Stanczyk, presented by Physical Gold Fund.
Now, Alex and Jim, question for both of you. On one of my projects, I work with a very brilliant video editor in India. And much to my chagrin, he's not been able to function these past 2 weeks because the whole country is in chaos. And here's the reason. The Indian government suddenly withdrew and replaced the 2 banknotes with the highest denomination. And the old banknotes were made virtually worthless overnight. So this drastic measure came with little to no warning, and according to my contact, it's created absolute bedlam. So Jim, first, you've been talking about the war on cash for some time. What does this mean in the context of that theme, and does what happened in India have any significance for other countries?
It has huge significance. You know, John, I finished writing The Road to Ruin kind of like early part of September. I pushed the deadline pretty hard because I wanted the book to be very fresh and timely when it came out. I actually talked about Donald Trump in the book, even though it was before the election, because as I mentioned, I thought he would be part of the scene. But, you know, then it has to go to the printers, and it's got to get printed up and put in boxes and shipped to Amazon and warehouses. It takes a few months for that to happen. So in the book, I was talking about the war on cash, closing banks, closing ATMs, money riots. I do see all these things coming. I had no idea that they would actually be happening in India the day the book came out. But the book came out November 15th. But on November 8th, just a week before, Prime Minister Modi wakes up and says the 1,000 rupee note and the 500 rupee note are no longer legal tender. He just said it's not money anymore. By the way, those denominations, the 1,000 rupees and 500 rupees, it's about $20 and $10, give or take. So it would be exactly like the President of the United States waking up and saying, as of now, all the $20 bills and all the $10 bills in America are no longer money. And you can imagine the panic. People say, wait a second, I got some 20s in my wallet, I got money over here, etc. It's no longer money anymore, except the impact was even greater in India than it would be here, because India is largely a cash-based economy. In the U.S., maybe we've got a few 20s in our wallet, but, we use debit cards and credit cards and direct payment and, Apple Pay and all these PayPal and all these digital systems. But India is very largely a cash-based economy. So imagine America the way it was, and when all the 20s and 10s are no longer any good. Now, what they said was that you could bring your $20 bill into the bank, your 1,000 rupee note, and you could exchange it for smaller denominations. And they actually printed up these smaller denominations. So it's kind of like, give us your 20, and we'll give you, 20 singles, right? Well, first of all, the tax man's waiting there at the bank. So when you come in with this pile of money, the first question they ask you is, where'd you get the money, right? Because they're looking for tax evaders, but they always blame it on tax evaders, terrorists, and drug lords. But in fact, they're depriving individuals of their liberty. This is part of the war on cash. The whole tax evasion thing is just an excuse to try to pull it off. But anyway, they got a tax interrogator there at the bank. A lot of people don't want to go into the bank. They don't want to deal with that. It doesn't mean they're master criminals or tax evaders. It just means that they've been in the private informal economy, probably in a very small way, and they don't want to bring that money in. So that's the first problem. But let's say you're a fisherman, commercial fisherman, and you wake up every day and you buy fuel for your boat and you buy bait and you go out and fish and you bring the fish back and you sell it, right? Nobody wanted your money. You couldn't buy the fuel for your boat. You couldn't buy the bait. You couldn't go fishing. You couldn't bring the fish. People were starving. And on top of that, this is the height of idiocy. These smaller denomination bills that they printed to replace the bigger bills, they were the wrong size. They were too big. They didn't fit in the ATMs. So they're running around. They had to shut down every ATM in India, rip the guts out, and replace it so that it could accommodate these larger size bills. I mean, what were they thinking? But this is, India is not, it's not like some off the run, it's not like Cyprus, right? Cyprus was bad enough. India is the 7th largest economy in the world. It has the 2nd largest population in the world, 1 billion people. It's a cash-based economy, and they wake up and say cash is no longer legal tender. And there are money riots. People are burning down banks. They're looting supermarkets. The police are out. I mean, the whole place is in chaos. And, Modi, I mean, he's not a dope. He has a graduate degree in economics. I'm going to write a book someday called when smart people do dumb things, because I see it over and over. These central bankers, these eggheads, these economists, they don't get it. They don't understand how markets work. They don't understand human behavior. It's no surprise that they get it wrong time and time again. But the point is, this is exactly what I describe in the book. Shutting down banks, shutting down ATMs, the war on cash, ultimately the war on gold. It's one of the reasons I urge people to get their gold today. Get it now while you still can. Because once the war on cash is over, and it's almost over, they're going to realize that, people who can't get cash are taking the cash and getting gold. They're storing their wealth in gold. Well, then they're going to have a war on gold. They have to force you into this digital banking system. They have to force you into the digital banking system so they can slaughter you with negative interest rates, confiscation, asset freezes, ATM closures, etc. If you have cash or you have gold in physical form, you're outside the system. You can't get hacked. You can't be subject to negative interest rates. You can't get frozen. You can hold your net worth, in your hand. You can hold your wealth in your hand, or in a vault or some kind of safe storage. And the point is, the war on cash is well along. The war on gold hasn't yet started, but you can see it coming. And that's another reason to get your gold today. So it's awful what's happening in India. I predicted it in my book. I didn't say it was going to happen the week the book came out. I'm a little surprised it did, but here it is right now.
Well, thanks, Jim. So, Alex, war on gold, is that what you see coming up? Do you see signals of that from your standpoint there in the gold market?
Well, we've seen the signals of this for a long time now. And so our operations are international. We see regulations that have been coming down sort of at an international level that affects the entire gold industry. And what I can tell you is that the regulatory environment has become stricter and stricter and stricter. And I don't think this is an accident, and I don't think it's going away. So speaking directly to the sort of war on cash thing that's happening in India, just briefly before I comment on this, one of our listeners is saying that in the Indian context, it may look the same, but the difference is that there are no fake currencies in the United States, which I take to mean that there's a lot of counterfeit currency. And that's the reason why they're doing this. But if you look at all the pieces, I highly suggest our listeners read Jim's book. If you look at all the pieces of what's happening around the world, this isn't just happening in India, it's happening globally. And they're using multiple reasons for putting this in place. Some of it is counterfeit currency. Some of it might be anti-money laundering. Some of it might be going after terrorist financing. These are all the pretenses that they use. If you look at what they're actually doing, it doesn't quite match up, because if you look at the things like having the tax man there to collect on all of the money, this is part of the global sort of hunt for tax dollars as well. So just looking at it from a gold standpoint, and Jim mentioned behavioral psychology before, which I always found fascinating, is that one of the effects of this has been a huge spike in gold purchases. So just in the 9 days since the demonetization was announced, India imported $2.1 billion worth of gold. We're talking over 50 tons. This is a huge amount. The black market rate for gold has been as high as 61% above the official rate. And the official rate, the regular gold premiums, these have been hitting, I think last Friday it hit 2-year highs. So ever since the government announced the demonetization, gold's been a strong focus for Indians who want to keep their wealth out of the banking system. See, many Indians, from what I understand, do not trust the government or the banks there. And the Indian government has indicated that the old notes can be turned into banks to convert them for new ones, but there's a time limit on that. And not only is there a time limit, just as Jim said, anything in a large quantity, they've got tax people there asking questions about where it came from. And if they don't like the answers, they might just lose that money or might have it heavily taxed. So we've got many examples now from around the world that the pretense of this war on cash is going after criminals, but in reality, it's being used to sort of shake down the populace for tax revenues. We've got the global sovereign debt crisis going on. And in addition to that, setting the stage, so to speak, for dealing with any upcoming liquidity crisis and possibly negative interest rates. As Jim indicated in his book, and I don't want to spoil it for you, but there's really only a couple of options in the next liquidity crisis. One is print, and the other is just lock the whole system down. So this isn't really conspiracy theory. China just did this. Last year in June 2015, they locked down liquidity in the crashing equities market. I spoke to several Chinese fund managers who said that during the crash, the government ordered them to cease trading. So one might not be surprised to see something like that in a communist country, but the reality is it can happen in the West too. There's a couple of drivers going on here. Negative interest rates, They want to set the stage for simplified bail-ins. If it's all within, their ability to bail in, it'll save banks if it comes down to that. And finally, outright confiscation of wealth under the pretense of making you safer and going after criminals. So the amazing thing about it seems like elites globally are coordinating on this. Jim mentioned something called base erosion and profit shifting, or BEPS. Jim, do you want to really briefly talk about BEPS?
Sure. I have a whole chapter in the book, Alex. Thank you for mentioning that. It's called One World Money, One World Taxation, One World Order. And let's just focus on the tax issue a little bit. I just got back from Ireland, and they're apoplectic in Ireland because their corporate tax rate is 12%. The U.S. corporate tax rate is 35%. So all this money has been flowing to Ireland. Apple and Microsoft and Google, they all have huge operations there in Dublin. I was kind of took a Sunday stroll and walked by all their offices. But Donald Trump is talking about lowering the U.S. corporate tax rate to 15%. So they're looking at all this capital and new investment flowing out of Ireland, potentially back to the United States. But this is a global problem. And, the monetary elites, the global elites, they love coming up with funny names for things so people don't understand what they're doing. I call this transparently non-transparent, meaning they publish papers and you can read them, but they're filled with jargon unless you have the technical expertise to understand them. It's very hard to penetrate. So they have this thing called BEPS, B-E-P-S. That stands for base erosion and profit shifting. So that's the enemy that they want to attack. It's interesting, the G20 outsources to different multilateral institutions. They turn to the IMF for the SDRs. We talked about that, this special drawing right of world money. They turn to the United Nations for climate change, but they've turned to the OECD, the Organization for Economic Cooperation and Development, based in Paris, for the BEPS program. Now, what's base erosion? Base erosion is when I take so many deductions, I pay interest to my foreign subsidiaries, that I actually, even though I have income in the United States, I don't pay very much tax because I've got so many deductions. By the way, just for the listeners' benefit, Alex, for the first 10 years of my career, later in my career, I turned to securities law and derivatives and hedge funds and ended up writing and doing the things I do today, plus national security work. But the first 10 years of my career, I was International Tax Counsel to Citibank. We operated in 98 countries. We had 2,000 subsidiaries and affiliates. We had a dense network of tax treaties. There's very little about moving money around global corporations that I did it for 10 years of my life, so I understand this stuff pretty well. So what you do is, you borrow money from your foreign affiliates, you pay them a lot of interest, you write it off, and you don't owe very much tax, even though you're in a high tax jurisdiction because you have deductions. That's base erosion. Profit shifting, you do something like, your Apple, I don't want to pick on Apple. There are many examples, but they're probably the best known. You have some invention. So you donate the invention to your Irish subsidiary, and then that Irish subsidiary, once it owns the intellectual property, it then licenses the intellectual property to manufacturers around the world. All those licensing royalties and fees now go to Ireland instead of the United States, which is where the technology was invented, because of course it has a very, very low tax rate. So the governments are losing this game. They're just not as nimble as the corporations. So they're trying to fight back by having global taxation. And what this plan calls for is that every corporation would have a global identification number. It's just like tagging a shark, or tagging a fish and releasing it so you can keep track of it. So every corporation would have an ID number, including all the subsidiaries and affiliates. Every transaction would have an ID number. And they would all have to be reported to this global database operating on supercomputers. And then all the countries would have access to the database, because the problem right now is, if you're a corporation and you shift your profits from country A to country B, well, country A sees half the transaction, country B might see the other half of the transaction, but nobody's seeing the whole transaction. Well, under this new plan, you will see the whole transaction because you'll have all the data in one place. Once they do that, they're going to pick their targets, and they're going to have the information to go after them using various anti-tax avoidance provisions like Section 269 of the Internal Revenue Code. There's lots and lots of authority to go ahead and do this. They just haven't had the information. Now they will. So they're going to rip these corporations apart, and they're going to make them pay taxes. They're going to make them put the income back where they want it. Germany's the leader in this. The United States is certainly involved, et cetera. And then governments are insatiable. They say, well, we just want our fair share. Well, everyone said, gee, fair share, that sounds fine. But what is a fair share? What's the limit? When governments spend unlimited amounts of money and have insatiable appetites for taxation, the fair share pretty soon turns into outright expropriation, which is where we're heading. So that's going on. That's in addition. I mean, we just talked about world money, the SDR. I mean, that's real. Those were invented in 1969. They were issued most recently in 2009. In July 2016, the IMF came out with a paper encouraging the creation of a private SDR market, and lo and behold, a month later, the World Bank issued a $2 billion SDR bond. Notice I didn't say $2 billion. I said 2 billion SDRs. It was denominated in SDRs, underwritten by Chinese banks, and the Chinese bought the bonds. So all this stuff is happening. It's happening in real time, and taxpayers are going to have nowhere to hide. Corporations are going to have nowhere to hide. Governments are going to keep spending the money. If they can't get inflation, they'll raise taxation. They got to do something because they can't pay the debt. It's more and more oppressive, more and more omnipresent. And the question is, what can you as an individual do to preserve your wealth? And top of my list is to buy gold.
Well, thanks, Jim. And now, Alex, I'm sure at this point you have many questions from our listeners, so over to you.
Okay, so yes, indeed we do. So before we dive into questions, this is going all the way back to the very beginning of webinar, Jim. We had a couple of comments come in regards to your Brexit call. Several people are saying, bravo, Jim, great call, Jim. Rickards is the man. I guess these guys did pretty well out of that. So the first question that I think this is a really interesting one is, do you expect gold prices to go down further after the Fed raises interest rates in December, or do you think that this is already factored in by the market? Essentially, do you think that it's already priced in and thus we're at a bottom for gold?
The December hike is definitely priced in, and that's why gold went down because of this increased expectation of interest rate hikes. And it went, that actually started in early October. We saw gold draw down in October around like the 1260 level. Then it started to rally back in anticipation of Trump and the Trump victory, and actually got back up around 1340 or so. But then it came down again, partly because of the stock market rally and the easing financial conditions. People said, well, the Fed is definitely going to raise interest rate. We had a strong dollar rally, and so gold is lower in dollars. By the way, it's up in some other currencies, a point you made earlier, Alex, but it is lower in dollars because of the strong dollar. As I say, strong dollar means a lower dollar price for gold. The Fed will probably say some things in December that will indicate that they do plan to raise rates again in 2017. So that's a little bit of a headwind. So I don't expect to see gold go down a lot from here. It could go down a little bit. I mean, it could break through 1,200, although I do think this is a very attractive entry point for people who don't have a full allocation to gold. But then it's going to be very interesting in the first quarter, kind of early next year, because we're going to face this fork in the road that I talked about earlier. Is the Fed going to accommodate trillion-dollar deficits? If they do, then I guarantee inflation and gold's going to go up a lot once that realization sinks in. Or is the Fed going to raise again in March and really lean into this? In the short run, that's a headwind for gold. Gold could go down a little more. I don't think it'll go down a lot more. But then a different dynamic is going to take over, which is you're going to have this crisis I talked about, this emerging markets corporate dollar debt crisis. And that's going to be just the kind of thing to get people interested in gold again because of the financial instability. So you got two different paths. One, I think, is a straight line to higher gold prices. The other one is a more circuitous route where they could come down a little more based on Fed hawkishness, but then the Fed is going to have to back off of that, or else they're going to cause a global recession, a global panic, and then gold will go up a lot. So it's a good place to be accumulating it. There are a couple, whenever I do these forecasts, I don't just sort of, throw a couple balloons in the air. I mean, we have specific, what we call in intelligence analysis, indications and warnings, specific things that we'll be looking for to tell us which road we're on. And right now there are 2 vacancies on the Federal Reserve. It's kind of interesting, the law of unintended consequences. Obama kept those seats vacant because he wanted to give Janet Yellen more power, right? Those seats have been vacant for 2 years. Why did the White House not fill those seats? Well, the answer is anyone who ever run a board, it's easier to control a 5-person board than a 7-person board. So by leaving the 2 seats empty, it gave Yellen, Dudley, and Fisher more power because they didn't have these possible dissents. But now Trump's going to fill those seats. Now let's see who he picks. If he picks hard money people, and there are a lot of people in the Republican Party who would like to see that, the kind of Tea Party would like to see that, well, that's going to, now you're really going to throw the world into recession, because if they want to lean into this inflation with some hard money picks, again, gold might come down a little bit from there, but there are going to be a lot of problems paying off this debt. But if he picks kind of easy money people, then, look out for the inflation. So that's one thing I'm watching. So I'll watch the Fed's December statement. Of course, everyone will be looking at that. Watch for these vacancies, see what happens to the dollar, see what the Europeans do. So there are a lot of things that we'll be watching. And by the way, another wild card is this Italian referendum. It's coming up on December 4th. It's technically constitutional reform. It's not a vote on leaving the euro, but it's sort of a package of technical reforms. It's likely to be voted down. There's going to be a no vote there. Prime Minister Renzi will resign. There have been 58 Italian governments since World War II, so an Italian government resigning is not exactly the end of the world. But the political landscape has shifted. They'll have to have new elections. There's something called the Five-Star Party in Italy. Looks a little bit like the Donald Trump of Italy. They have this kind of nationalist, anti-immigration, anti-Euro platform. They get more seats in the parliament in the next election. Does that threaten the Euro? So, and what is the implication of that for Deutsche Bank? Because there's this whole staring match between Renzi and Merkel around Deutsche Bank versus Banca Monte dei Paschi, which is the Italian bank that they want to bail out. And Merkel says, don't you dare. And Renzi says, well, okay, if we can't bail out our bank, you can't bail out Deutsche Bank. And Merkel kind of said, yeah, you're right. So the whole Deutsche Bank crisis could come back, and that could send gold up. So, I'm not trying to be wishy-washy. I'm just trying to explain that there are a lot of dynamic forces in play. We're watching all of them. I think all roads lead to much higher gold prices, but they kind of have different paths along the way.
Okay, very good. We have a question here that has been asked by actually now a number of different people. They're kind of saying it in different ways, but I'm going to read the one here from Anthony K. And his question starts out with, Trump has previously expressed favorability for gold as a monetary anchor. So if inflation spins out of control, do you think President-elect Trump would enact some type of gold standard? He says, thank you, and thanks for all the great work we've done here.
Sure, thank you. Yeah, Trump is the first president-elect, until a couple weeks ago, the first presidential candidate to say anything favorable about gold since Ronald Reagan. It's a long time. Presidential candidates just have not talked about gold since 1980. He didn't say he wants a gold standard, but he did say that, maybe gold should be a measuring stick or a frame of reference or something we think about in terms of the monetary system. One thing I'm watching, one of his top advisors, I did not mention her before because I was talking about the tax and spending people, Malpass and Bannon and Pence and Kudlow and those guys, but one of his top advisors is Judy Shelton. Judy Shelton is a hard-shell gold advocate. She wrote a book in the 1990s calling for a gold standard. She's a regular op-ed columnist in the Wall Street Journal. She writes for the New York Observer. She's a strong advocate for gold. She's in the mix. She's one of the policymakers or advisors in Trump Tower. So you got to really keep an eye on her. I would put more weight on the fact that Judy Shelton is in the mix, even than on what Trump has said publicly. But there's a problem. If you want to go back to gold in any way, either as a frame of reference or a benchmark or whatever, you have to have a much higher price. If you don't, it's deflationary. And again, the math, we've gone through it before. M1, money supply, M1, for the four major economies, so Europe, Japan, China, and the United States, which is 70% of global GDP, it's $24 trillion. It's approximately that we know that number. If you assume 40% gold backing, now you could assume more or less. That's kind of seasoned to taste. I picked 40% because that's what the U.S. had through most of the 20th century. 40% of 24 trillion is 9.6 trillion. There's 33,000 official tons of gold in the world. So just divide 9.6 trillion by 33,000 tons, you come out with a number that's about $9,000 an ounce, or close to the $10,000 forecast I have. That's the implied non-deflationary price of gold. That's the price that gold would have to be, given the amount of gold we have, to back up 40% of the money supply. So if you have a lower price than that, if you have, today's price of $1,200, and you're trying to manage the money supply to that target, you're going to have to reduce the money supply, which is extremely deflationary and depressionary. They're not going to do that. It's much easier to have a higher price of gold. One of the reasons probably we haven't heard about this too much lately, somebody probably did the math. The thing is, it's one thing to say, oh, I like a gold standard. Yeah, that sounds good. But when you actually crunch the numbers and look at the amount of gold, look at the amount of money, make some assumptions, and as I say, do those equations, you get to $8,000, $9,000, $10,000 in a heartbeat. And maybe people are shutting up about it because they're like, wait a second, we don't want to go there. But they may have to, whether they like it or not. So it's a very interesting question. Keep an eye on Judy Shelton. Watch her because she's the real gold bug in Trump Tower.
That's outstanding. I'm personally a big advocate of what I call honest money, because various reasons I think that fiat ultimately leads to an erosion of the rule of law and an erosion of morality, but that's a completely other subject. Pretty exciting stuff, and even a small potential for that. I think there's a lot of people who would be excited about that. Okay, so let's see. We've got only a couple of minutes left. We're going to go with one more question here. This is coming from Tom D. He's from the Netherlands, Jim. And his question is, in The Road to Ruin, you mentioned that after SDR printing, the dollar is worth what the G20 and the IMF decides. And only gold is immune to this. This pleads for storing part of one's wealth in physical gold. But since many countries can confiscate gold, is it likely this will happen in the next financial crisis?
Well, it will probably happen in some places. You have to pick your countries very carefully. One of the reasons people are surprised to hear me say that is the United States has the Fifth Amendment. It is unconstitutional for the government to seize property without giving just compensation. Now, people say, well, what happened in 1933 when FDR confiscated gold? Well, it was a partial sleazy confiscation. He actually gave people $20 an ounce. That was the official price of gold at the time. So you had to hand in your gold. FDR made it illegal by executive order. You had to hand it in. But you'd get $20 in paper money for every ounce of physical gold. And that's how he got around the constitutional objection. Now, Roosevelt knew that he was going to raise the price to $35. So in effect, he stole the difference between 20 and 35, but he didn't tell anybody that at the time. He just confiscated it at 20, raised it to 35 rather, and then the government kept the profit. In effect, he stole the $15 an ounce from the people, but it was technically constitutional because he did it sequentially in such a way that he paid people what their gold was worth at the time. If you want to confiscate gold today, at least in the United States, you have to pay people for it. But the difference between now and 1933, we're not on a gold standard. There's no fixed price for gold. The government can't do the bait and switch that they did in 1933. So what kind of world is it where the government's going to want to confiscate the gold, right? That's the world where gold's already going to $5,000, $6,000, $7,000 an ounce. That's the situation where they're going to want to hoover up the gold, but they're going to have to pay you for it. They're going to have to pay you the market. So I think the combination of the fact that we're not on a gold standard and we have Fifth Amendment protection, I don't think the government will confiscate it, but if they do, you're going to have to get your money's worth, and so you won't be left out in the cold.
Okay, so very briefly, what would you say? We have a lot of people who listen to our podcast from around the world. A lot of our people are from the UK, all over Europe, people from Latin America, really everywhere. What would you say are the chances of something like that happening? And would you say that maybe putting some gold in a different jurisdiction, not having all your eggs in one basket, is a smart move?
It's always a smart move. I talked about the United States. I happen to be a U.S. lawyer, among other things, so I kind of focus on this history and the constitutional objection. But you hear about it most frequently from Americans, and the answer is they actually, under the Constitution, they can't take your gold without giving you your money's worth. So you'll be fine, at least to that extent. But my number one jurisdiction in the world for rule of law and legal safety is Switzerland. For a lot of reasons, we don't have time to go into all of them, but they haven't been invaded successfully for over 500 years. They're heavily armed. They've got a good rule of law. They maintain their neutrality. They've got a good sense of community. They have a tradition of this. So I'm not saying there are not other good jurisdictions around the world, but you really got to study them carefully. I know a lot of people like Singapore. Singapore has good rule of law, but it could come under the thumb of China. I don't trust China at all, but I do trust Switzerland. I think that's a safe jurisdiction.
Okay, outstanding. I happen to agree. It's our favorite jurisdiction for gold storage as well. So with that, we're out of time. Jim, I want to thank you for your insights and your time as always. And I want to thank all of our listeners and for the questions that you've provided to us. We always enjoy getting those from you and feel like it's a really great conversation with you every time we do this. And with that, I'm going to turn it over to John.
Oh, thank you, Alex, for some great insights today from you. And thank you, Jim Rickards, from me. It's always a pleasure and an education having you with us. And most of all, thank you to our listeners for spending time with us today. Let me encourage you to follow Jim on Twitter. His handle is @JamesG.Rickards. And so goodbye for now, and we look forward to joining you again soon.
You have been listening to The Gold Chronicles with Jim Rickards and Alex Stanczyk, presented by Physical Gold Fund. Recordings can be found at physicalgoldfund.com/podcasts. You can register there for news of upcoming interviews with Jim Rickards and other world-class thinkers.